In this video, traders, let's have a look at the question, can you eliminate emotion by just using a robot? Stay tuned. Hey guys, warm welcome to you. All right, so I spotted this one in the comments a while ago, and it was, I can't remember which video we were talking about, but it was basically saying, well, just use a robot, just use a robot. All this stuff about, I guess we were talking about running trades, talking about the emotional challenge you get, you know, when it's about to hit your target and all this kind of stuff. And, you know, I wanted to address this because very often I think this is something that comes up. It's like, well, I can automate my way out of psychological challenges. I can automate my way out of the chimp inside us making the decisions for us. And I'll tell you why I don't think you can do that. You know, bearing in mind everyone looks at this differently, but I'll tell you why I think that is. So if you imagine that you have a market that's doing this, okay, whatever it's doing, and there's your market, whether it's a currency pair, whether it's an index, whatever, and you're trading this. Now, you are trading it and there's an emotional attachment to it. Now we try to reduce the emotional attachment, we do all this kind of stuff, separate topic. But the point is we have a strategy and we try to stick to the strategy, right? So we are always going to be tested. It's like, oh, maybe your price target was here and you kind of got in long here on the break, almost hit it, and you're like, oh, actually, you know what? I don't think it's going to hit that price target, I'll come out. And so you take the trade out too early. Let's use that as a rough example of kind of some of the challenges we have. So there's your target there, there's your entry here, and you came out there. So you came out a little bit early and it finally went your direction. Now, the argument is, well, if you have a robot, then that's not going to happen to you. And like, okay, to a certain extent, I do agree. Because if you've got a robot, you're not involved in this at all. Now let's assume that you also have the discipline to not meddle with the trade. Now that's a separate thing. Some people may have a robot but still override some stuff, but let's assume that you have and you leave that. So that's fine. On each individual trade basis, this would probably work out. Now, here's where I think things differ slightly. If you imagine now we have this scenario, still see that one? Yep, good. This here is your equity curve. So similar, okay, well not similar in terms of pattern, but we're still trading something. This is the robot systems equity curve. Now I think these are fundamentally in our mind very, very similar. You know, there may be, one might be a stock, one might be a currency, one might be an actual market, this might be the equity curve. We still treat that the same. So we are trading the systems equity curve in a way. Because here you go. Imagine this. So imagine you're in this system from down here, great. It comes up to here, you're like, fine, that's really good. Then you start to see this big drawdown. Now all of a sudden, in your mind, you're saying, well, you know, is the system stopped working? Should I not trade the system anymore? You know, the robot's doing what it should do, it's trading away whatever the strategy is, but you know, we're getting quite a lot of drawdown here, it's 50% off highs. You know, I'm imagining this going down and losing all my money. And as a system owner at that point in time, you still have to make a conscious decision to risk capital or not. Just like in a trade, you're going to make a conscious decision to risk capital or not. Are you going to carry on risking capital and potentially have it draw all the way down because the system's not effective anymore? Or are you going to stick with it and see it riding up? That's no different to you holding a stock or a market. Let's say you're long, this is cable, whatever, GBP, USD, whatever market it could be. You're there, you see it coming down, it gets to here, you think, God, is it going to go through the floor or is it going to go through the highs? There's no difference in your mind. It's still risk capital, whatever instrument you're trading. So yes, to a certain extent, I do agree that by using a robot or an auto trading bot, whatever you want to call it, you can mitigate some of the things on an individual trade level. It's going to execute exactly as you set it, and unless you overrule it, it's going to do that because that's what algorithms do. They're good at doing whatever they're told to do, and that's it. But you still have the equity curve of the robot, of the system to trade. And ultimately that decision always comes down to you. There is always a point in time where you are the last line of defense. You are making the ultimate decision on risk capital. And so if this is the equity curve of the robot, there's no difference to this being a stock. And at that point in time, you're making this decision, do I want to stick with this because I still believe that the system's effectiveness is going to come back on top, or is going to fall through the floor? Just like if you were in a market or a stock and saying, hey, well, this stock's going to be way higher in the next 6 months than it is here, I'm going to stick with it regardless of what happens. That is still an emotional decision based on risk. So I don't believe that you can program your way out of having to take a risk-based decision. Yes, you can smooth off some of the edges. Yes, you kind of can kick the can down the road, if you like, by saying, okay, on an individual trade basis, I'm not getting affected by this. But on a system level, at some point, you still have to make that decision. So that's my thoughts on that. Let me know if you agree or disagree with me, guys. I don't pretend to say that that's exactly the right way of thinking about it, but that's the way that I think about it. I think that at some point, there's always that risk-based decision that you as a human being have got to make, which is why I'm a huge fan of improving those decisions, improving your ability to take risk-based decisions, improving your ability to be resilient under pressure, under fire. And if your plan was to stick with this for 2 months, and 2 months happens to be here, then you stick to your plan. And that's the same if you took a trade. You took a trade, your plan was to stick with it 2 months, 2 days, 2 hours, whatever the time frame may be, you do that. If that proves to be wrong, you then look and see how you can improve, but you don't adjust the plan on the fly. Take care, guys. See you next one. Bye-bye.